What's happening, guys? Hopefully you had a good week again. A lot of opportunity continues to develop every single day. Stocks are doubling left and right, and it doesn't necessarily mean that it's easy, because it's not. There's a lot of new range that you got to get familiar with. There's you might be used to letting a fade work, and you're on the right side of the trade. It's fading most of the day, and then all of a sudden it just turns on a dime and starts to head back up. MIRM comes to mind, is a trade that I've been trading pretty much every single day. It's been a good stock to go back to. It's been paying out, but the difference between the lows towards 22 and where it closes, where it rebounds after you kind of scale into a winner, it's a big difference. So that's kind of one thing that I've had to adapt to. AXSM this week, we had a monster move. Then they priced, then there was a huge move after the pricing of the offering, and then it took all the way through, I think, midday before we ended up getting a pullback. And you still want to tiptoe around your entries. You got to be very, very cautious with size. And then you look back and you're like, oh, that was $12 a share that I could have nailed on larger size. So yes, it's very easy to get frustrated right now, but the key is to not get frustrated, because everywhere you look, there's new moves happening, there's new moves starting, there's new opportunities. So the worst thing you can do is get frustrated that you missed it, and then start to use that frustration on the next name, and then you end up in a hole. So keep that in mind when you're going through things. The other thing that I noticed this week with my trades, and it's not always typical. Usually I have, say, 3 main trades that make up a good portion of what I make on any particular day. I might have a bunch of scratch outs or small losses, and then there's 3 main ones that really add up. This week, I would say that 1 trade per day made up probably 80% of my gains. And so that's a little bit different from me, and there's always that saying, less is more, and a lot of great traders that I know focus on that 1 trade, but it just doesn't really fit my personality. Usually I'm used to kind of dabbling in a bunch of different names, scaling into what works, and kicking the rest off of radar, or off of my entries. If I'm wrong, I get out. And so this week has been really focused on that 1, and what's interesting about it is it's pre-market. So SLDB was a really big one, ABEO on Friday, and then PRTK. All 3 of these, actually 4, LXRX. So there was 4 big opportunities pre-market this week, which usually I try to put the brakes on and get familiar with things and wait for that volume, that action to, come out of the gate. But this week, these trades happen pre-market. You got to be prepared. You got to be ready. You got to be on desk. And so, if you weren't there, you obviously didn't capture that. So, that's good and bad. There was one day that, I've been training with Zach for a year now, and he was not feeling good on Thursday, so he bailed, first time in a year. And because of that, I wasn't at the gym, and because of that, I was on desk, and I was able to get, I believe it was PRTK. So that was a fortunate turn of events, and it ended up being a pretty good trade. So with that said, my focus is still the majority of size, the majority of scaling, all that kind of stuff. I really like to see real volume, real tape, real action after 9:30. So it's a rare occasion that I'm a little bit more aggressive, as I was this week pre-market, and that just comes with the volume, the tape, the action, the opportunity. And so it's not always going to be like that. I find myself, if I get too aggressive pre-market a lot, my bias starts to change, and then I ignore what happens off the open to try to convince myself that I'm right no matter what, when the tape's suggesting something else. So I give myself a little bit of a headache. I got to work out of the trade, and then I might have been right all along, but had I just maybe made the pre-market and the regular hours a different trade, I would have been a lot in a much less tight spot, headache, no headache, etc. So that's the comments on this week as far as a little bit of changes in what has worked for me. Second thing is we still have another Sunday scan before the new year, but I tweeted something yesterday that I think is important. Everybody always pushes back the resolution, right? They always, I'm going to start January 1st. I'm going to do this January 1st, and that's when I'm going to do it. But I remember Sanlucci had mentioned one year like how much he dislikes stupid New Year's resolutions, because all you're doing is pushing back whatever that is, whatever change you want to make. So I really like that. I actually agree, and I think that why wait till January 1st? And you can really make a difference in the next week and a half or so, however many days are left. We've got the 22nd now, so we got 8 days left. But think about the changes that you want to make. Think about how you can set yourself up the best for 2020, and whatever changes you're thinking about making them, do that today, because then you're going to be ready to go, and you don't have to work into it January 1st, January 2nd, January 3rd. You're already going to be a week and a half into whatever those changes are that you were trying to make. So consider that. I think it's a valid point, and don't prolong those changes. And the better you set yourself up this week into next week, the better your opportunities are going to be in 2020. So, last thing on the scans, just a reminder, I always put a bunch of names, right? 15 names or so, but I'm not trading 15 names. My goal, and what I do every single morning, is I grab the mic at 9 a.m. and I go through and I condense that list to usually about maybe 2 off of this scan, and then 2 new names. I take the top watches, the most volume, the most range, the ones that fit with my personality the best, and that is where my focus is. However, when I go through these scans and when I review these things, I actually get to see where things are setting up, what stock is moving, and does this look like a potential swing trade? What if this breaks this 4 level? And a good example of that is LAIX. And if you look at LAIX, it was on scan all week, and it wasn't a trade for me Tuesday or Wednesday or Thursday. The goal was a week open for potential breakout on Thursday, and the same thing Friday, where a big picture potential swing idea. So the key level becomes that prior resistance spot, which was around 420, something like that. So then all of a sudden it breaks on Friday, and I see it on scan. Now, it's firing off on my trade idea scanner up there, and normally it might just be like, I've never seen that ticker before, forget it. But I remembered, I saw it, and I knew it from scan from the prior days. So that's the idea, to trigger a memory. I've seen that chart. I knew it just needed to break that 420 mark, whatever it may have been, and then I'm interested. So now, when you see it up there, it means something different than just another random ticker that hits scan. So that's the concept of scans and a longer form scan. But each and every single day, my goal and what I do is to bring it down to 2 to 4 main names, usually 1 or 2 off the gate, meaning off the open, 9:30, 9:35. I call them reactive trades. Something where market would open and I'd react to that move. I'd react to what I'm prepared to do. And then I'd have maybe another 2 where I look for that bigger picture type trade, 9:45, 10 a.m. plus. And the reason why I have it for 9:45, 10 a.m. plus is because it gives it a chance for the market to develop. You see a lot of newsletters make plays before 9:45. That's prior to market makers kind of figuring things out and developing that market price, right? So a lot of times you'll see that whole, the big moves, circuit halts, and all that kind of stuff, and then they start to kind of consolidate 9:45, 10 a.m., 11, and so on and so forth. So we had a lot of good action this week off of those types. SYRS was one. There was just the IPO, I forget the name offhand, M something, the other day. And these are all reactive trades off the open, but once the emotions, once the newsletters kind of lay off them a little bit, the normal price action starts to come back in. And so with that, there's some great opportunities. So let's see what we've got here. Let's take a quick look at a couple of the recaps from last week. I tweeted these, so if you guys don't follow us on Twitter, go to Investors Live on Twitter. And occasionally I post these types of things. I posted a couple of the better trades and then a couple of basically the stop outs and kind of keeping things tight while letting the winners work. So first and foremost, DCAR, you guys should probably be familiar with if you guys traded it back with that hype into the Uber and the Lyft IPOs. This was a really good one. They had just done a fresh reverse split and ended up going from like $1.20 or so to almost $6 per share. It was a really good swing idea into that, but they ruined it with a raise right into that 6 level. So that was unfortunate, but it still ended up being a nice doubler or tripler for a lot of people. So at any rate, they got nothing going on. They ended up doing a merger. They halted it for that news, and then upon the reopen, I was interested. So normally I probably would have bought it at the 75 cents or wherever it had opened. I had a feeling that it would probably get some momentum. So, but I didn't get the open print. So I waited, and it suggested that to me anyway that it looked like it wanted to play. So I went ahead and got long 84, 85, 86s, and then I scaled into that a little bit over 1, and just based on the action, based on the volume, and also kind of anticipating it to continue to go into circuit halts. But with that said, there's only going to be so many circuit halts that it's going to do. This is a name with a ton of bag holders. It's not a huge float, so it definitely can run, but anytime that it's going to ramp up that fast, that quick, it gives the opportunity for all these back holders to get out. So unless it churns and churns and churns a lot higher, you should always assume that it's probably going to run into some resistance. So with that said, I wanted to be on the offensive and have my offers out there and go ahead and get lifted. So I did exactly that. I sold some into the, I think it was at that point, the second or third halt. And then I sold the rest on the last circuit halt up open. And after that point, it went straight up a little bit more, maybe another dime or 15 cents, and then slammed down and ended up going into a circuit down halt. And so the point here, and what I always like to kind of showcase anyway, is that, I might have sold a little bit early, but had I not sold there, I probably would have ended up getting out lower, because if I did not get a perfect exit into that rip, then there's a good chance that I would have been caught in the downside halt and I would have been selling at 20 cents less than where I sold on the way up. So it's just a good reminder that you might want to be on the offensive on these. There's no problem holding a core or something like that, but anytime that you get a little aggressive, anytime that you scale into something, remember, you're here to trade, and half these small cap names are trash. So just make sure that you are on the offense, you are taking those trades, and not turning into trying to hold these things for forever. LXRX was the big one for me. This was a fantastic way to kind of start the day. We had some really nice gap up. And, if I was on desk a little bit earlier, I probably would have started into the 6s or so, but it wouldn't have been any size. It would have been, slowly kind of scaling and anticipate potentially higher. But if you look at the daily, this thing's been, on a tear. It's been running. It's been squeezing. It's been breaking out. It's been saved every single time it pulls back. So a big move like this is going to be a liquidity event for a lot of people. It doesn't mean that it's going to crash, But it just means, in my mind, that people are going to use this to lighten up based on all the times that it's been saved off the gap downs, the rallies, the squeezes, the gap fills. And so with such a big gap, in my opinion, people are going to use that opportunity to loosen up a little bit on their size. So one thing that I really am happy about on this trade is if you look at my covers. I covered about 70% of it down there. Not all of it, but a good majority of it, and I was out a little bit lower, but unfortunately the 9 o'clock flush there missed me. But with that said, I think that this is progress in what I was talking about earlier in earlier Sunday scans, where I get short, I nail the trade, I scale in, I'm up huge, and then instead of covering that flush, I'm looking at it and I'm like, okay, I'm going to let this winner work. And then all of a sudden it's like, bam, 2 candles back up. And I'm like, man, I was just up so much, and now I'm either, flat or up small, minimize the trade, and I'm here kind of contemplating whether or not I should go ahead and get out or not, and now emotions are involved. So the point here is that that's progress in identifying an issue that was kind of sneaking up on me, and I'm really happy with those covers. No questions asked. It flushed out. I was in at 530s. It flushes out under 4 to 390s, 380s, and I'm there. And so I was really happy about that. I tried to scale in around the core the rest of the day, as you can see, into the red to green move, and no dice on that as far as getting a huge unwind. I was looking to scale in and let it work, but I got good covers. But this kind of trade I was playing like the long game for. Kind of dabble in, and when it cracks, I want to scale into that huge unwind, but it just didn't crack. So I was shorting the high 440s, and I covered basically 438 was my bid there, and I think I took the rest on the offer at 440. So these trades good, but this was just kind of sitting in the name for hours without really anything really happening. Rad was great. Rad was one of those where, on Thursday I had nailed it. That was great. 970s, 10s, 1020, 1050 ads to 1170s exit. And it kept on going. But I absolutely knew this was going to go. And, no matter how much no matter how confident you are and stuff, you're always going to miss the trade, right? So I was focused on LXRX and ABEO and a few others. So unfortunately, I didn't get the long side of this trade, and I would have loved this. I would have scaled, and I would have been pretty happy with the way that it turned out, because I anticipated in my head this happening. It was kind of the game plan on scan the prior night, but again, you can't nail it all, and I try to focus on 1 or 2 names. I don't trade them all, so I knew that this was going to give people a run for their money, especially if they shorted too early. I've traded this one before. I told you guys to go back and look at June of maybe 2 quarters ago or so, and very similar move where it trapped, squeezed out, and then unwound into the close. And so we had a very similar situation. I got short. I didn't want to get too aggressive, so I went ahead and covered, and then later on I got short again and looking for the unwind. And again, with keep sticking with the theme of proper covers, it flushed under VWAP, and I covered. And had it stayed heavy at VWAP, I could rescale into that. But I was very happy with the fact that I took some off, and so that was that. SYRS was an example of what I was talking about earlier. Newsletters kind of creating their own market prior to the market developing. So typically the market might develop 9:45, 10 a.m. So this was a nice opportunity. I shorted into the parabolic, the circuit halt fail, I added into the winner, and then I covered down here into the flush. And I dabbled again in case it cracked. Ended up coming back up, but again, I was just kind of dabbling in, waited for the kind of the exhaustion move, and then I started to scale in a little bit, and ended up being an okay trade overall. I did try it again, but ended up stopping out right over here. So good opportunities there, kind of just knowing, you know, the influences in the market and whether it was natural or kind of forced, and that's what provided that trade there. A few others that I had, BB. This was, you know, I just put a dabble on. So, you know, whenever I say a dabble, it's like a fifth to a tenth of a position. You know, something where I just want to be able to see it. I want to see it in my, you know, positions window so that I'm focused. I know I want to trade it. I don't want to miss it, but it's not something that I'm worried about 20 cents, 50 cents, you know, stuff like that. So I just dabbled on because I knew I wanted to potentially short this name. And so it started to rip as I had kind of hoped to get a better entry. As soon as I put on a dabble, I said, put on a dabble. I'm hoping it you know, rips up towards the 650s and be able to use that as a guide. And so that's exactly what I did. And then I started to scale into a winner a little bit. And it didn't crack where I thought it should, or it didn't stay heavy where I thought it should. So I went ahead and moved on the majority. And then I took the last bits off. AUPH, this is kind of me joining the trend. Again, a dabble, hopefully scale into a potential winner, and you know, it just didn't work. So it ramped back up, and rather than waste time and energy and focus, I'm back to LXRX, some RAD, other things that will potentially work versus something that I was wrong on. Same thing here, PHAS. I missed the my goal was to short into this unwind, but I joined the trend, red, and I covered a little bit, covered more, rescaled, covered more, and then I just kind of dabbled on the way up, and it just, my goal, again, just like LXRX, is kind of slowly scale, small size, and then when it cracks, if it does, since SSR was on, I want to be able to you know, scale into that winner, and it just didn't work, so I went ahead and moved on. And then ABEO was one that, you know, you just got to be familiar with what's going on. You know, they filed, had a PR filed the night before. They want to, you know, do the offering with warrants and whatnot, and then the next day, you know, Friday morning, they put out a PR and everybody's buying the headline. And it's like the short-term memory, they forgot, you know, the prior night's news. So that gave a really big opportunity. And so I went ahead and shorted into that parabolic move, and that was 415, and then it completely unwound under the threes. So it was a really good opportunity, and really happy with the way that one turned out. So let's go ahead and get into scan here. D22 from YouTube. I replied to you, please contact me. We've got a boatload of shipping things that we've got to send out, so we will be sending you something as well. Thank you for your comment, and thank you guys for all the comments as well. We're going to try to start to do some other content besides just the Sunday scans from some of your feedback. So when you guys are leaving comments and whatnot, just like I said the prior weeks, you know, let me know some ideas of, you know, what you're having trouble with, what you'd like to hear more about. And we're going to start to make some other content as well to try to liven this up a little bit. So, LAIX. LAIX is a perfect example of what I started the video off talking about. And the idea is not to trade 15 or 20 names per day. That's not the idea of the scan at all. The idea is to get those symbols in your head, get the charts in your head, be familiar with what's happening in the current sectors, markets, this and that. Just like shippers last week, there was a lot of nice breakouts on NAT, for example, was a shipper name. Nice breakout across all those shippers, and then they also all faded after that. So it gave a nice sector trade, but you wouldn't have known that if you weren't continually doing scans. LAIX is not a symbol that I am typically familiar with. If I saw it on Trade Ideas up here, flying around, I probably wouldn't have picked it up. But because I did the scan, I was familiar, and I said, you know what? If this breaks 4, I know that it's probably going to go. And that's why I was able to bring it to people's attention so quickly on Friday in the low 4s, the 450s, the 5s, before it went to 8. And I'm not saying that I doubled on it. I didn't. But the fact that I was prepared, the fact that I knew that over 4, the 420 breakout, 450 was big based off of the prior fails, that allowed me to react that much faster. And then I also knew, we had a potential squeeze opportunity for the short later on in the day. So ended up trading that, ended up being a pretty good trade. I think we're still going to have some pretty good opportunity here. So with that said, I trade 1 to 2 names off the open, and main focus is about 4 names, not 15, not 20. LAIX, the idea that I wrote in Scan basically is, I'm either going to look for a weak open, kind of consolidate, and a potential rip back red to green. When it was breaking out on Friday, the first breakout, I mean, there was no offers. It was kind of crazy. It started to kind of go up almost into circuit halt, consolidated, almost into circuit halt, consolidated. Squeezed out, you could see a lot of volume come in, and then it gave an opportunity for the short. After that, it started to churn and churn and churn and churn, and it actually went and made new highs. So, with that said, I think that there's a little bit of shorts that got in there at the end of the day on Friday. I think that if we have a weak open and it doesn't break down, typically I'd be looking probably towards the fact that it closed over here, and it closed, what did it do? 768. So typically I'd be probably looking for 750s, 740s. And the reason I say that is because if you look at this level right over here, this is kind of where it started to base. And it's also like the prior top right here, prior top, and then it kind of just squeezed a few folks out. So usually I look back to where it was kind of hanging out, and as long as it holds that level and holds trend, then I am interested. And if it holds the 740, 750s and starts to kind of grind up, then we've got that red to green potential trade, and then maybe into some more circuits, and we could get into 10, 12 type territory. Otherwise, if we get a gap up and a newsletter comes at it, and they make it all nice and long crowded, retail chasers, sheep crowded, then I will be looking for similar to what we went over on the SYRS trade. MRNS, I got long on this one towards the VWAP level down here. It's about 1040. And this is a good example of kind of being patient, wait for the trade to kind of come into you, and then make the trade from there. Once you get that VWAP confirmation, you can kind of scale in accordingly. So higher the better here. I'm not convinced on the breakout. I think that if we were to gap and retest towards these levels, over 220 range or so, 220, 230, I think that if we were to gap into that level, we could potentially spill back under. Otherwise, wait for it to consolidate for a few days and then potentially a breakout there. RAD, I kind of hit that when I was going over a little bit of my review. So it did have a little bit of a pullback after hours, but I want to be prepared for a reactive trade. I think that if it flushes out, it could rally back very nicely. If it gaps up, I think it could fade very nicely. But I want to be aware of the fact that it probably needs to consolidate. So I don't want to think that if I nail it, that's it. It's unwinding. I nailed it. Let's go. It's not that kind of trade. I think it's a reactive trade. Let it flush, cover, or weak open, rip, sell. And then let it just do its consolidation for the next day or two. And then I think we will have a secondary move, but not yet. It's basically a doubler in 2 days. It had nearly 40 million 2 days in a row traded. So there is a lot of churn, but at the same time that's a pretty big move to digest. So it's healthy for it to consolidate for a few days. LXRX, My fear is that it just kind of does nothing. So I would basically be looking for a morning shove, 450, and a rip. Look to fade that back to these levels, maybe a little bit lower, potentially towards 380s to 4. But I'm not expecting a ton. It's been, like I said before, it's been saved a million times. It's consolidated. It's squeezed out. And smart money had a chance to kind of probably get some shares out on Friday early, and they'll probably put those back on the bid. If there's any big pullbacks. But I'll be watching it. I don't want to lose it off radar. I think that a lot of people will lose it off radar, and then I think we'll have the opportunity once nobody's looking at it. So I'll definitely be looking for that short trade. I'm not really interested in the long. FTSV, I want to keep an eye on it, and the reason is, it could be something like ARWR. So, you can see this, it was a nice little setup, kind of breaking out, and then all of a sudden it just, flushes. And I feel like that's kind of what we should expect. KRTX had a nice little breakout here and then slammed. I'm not saying that FTSB won't continue to go. I very well may, but the way that these things are trading is you just got to be prepared for anything. And I think KRTX is a perfect example where you've got this fade straight down and now a nice little breakout and it pulls right back, and then the next day it's like nothing happened, right? So this is kind of that consolidation, transitional type of volume where the breakout buyers bought, now they unwound them, now smart money's buying, and then they finally have the breakout that actually does go back through that prior high. And it's actually a good learning moment here to kind of see how looking left can really help you, right? So even if you didn't participate in any of this type of action, you look at all these wicks, draw a line across, and you can see that over 78, 78.50, 79, that was kind of the breakout level. So just like we look at wicks on the other side, we look at wicks on the top side too. So with that said, FTSV, it looks perfect. So therefore, I'm thinking contrary and potentially looking for failed follow through momentum. But in this market, bios, I've been on trading them. So I may or may not touch this depending on the volume. But if it does either gap and it shoves into the prior highs here, so if it goes something like 42.60s, 42.50s, I would be potentially taking that trade and looking for maybe something like 40, 39, 38. They did just raise at 35, but obviously in this market, it doesn't matter. DTIL, I'll be watching this. This one was a major trade opportunity. This was another one of those kind of sell the news, gap up, headline buyers, and then all of a sudden they just pulled the bids and it was bad. A couple circuit salts down, and so now what I compared this to on Scan to kind of jog people's memory was CLVS, right? So CLVS had this unwind, and so I feel like we're maybe in this area here on this DTIL move. And the reason I say that, or just to kind of remind you, is maybe tomorrow we had that gap up and it flushes out, but I would be cautious getting too aggressive because they might want to save it. They might want to save it that one extra day, that 2 extra days, because it's no stranger to being saved, right? We've watched this entire move happen, and every day they kind of absorbed. So you should expect that they might, hang around a little bit longer. And at that point, when that squeeze happens because of everybody that anticipated the short, tomorrow, Monday or Tuesday, when that unwinds to the upside, when the short trade unwinds to the upside, that's the day that I'm interested. So I may be wrong and it may be tomorrow, but I'm comparing this to CLVS in the sense that, wait for the trade. There's going to be that exhaustion candle. There's going to be that opportunity. And whether it's a weak open, whether it's a parabolic move, whatever it may be, I'll be looking for either that failed follow through momentum or that exhaustion candle on a parabolic move. Sava, S-A-V-A, Sava. This ripped on, I think it was 467,000 shares or something like that. A director bought, and I think the CEO bought some as well. You guys can fact check that, but there was definitely two. But nice breakout, very big rally. I mean, a major rally off these pullbacks. If you guys remember this day, they had some warrants to go ahead and convert. They probably converted them all, but it really came back on very low volume, and now we've got a nice little breakout trade. But the move itself up to these 280s, 290s is a little crazy. So I am hopeful that it's still up there, 270s, 280s, and we got chasers towards 3, because that's going to provide a really nice opportunity. And I would be looking for it on the backside, the short side, and I'd be looking for a setup just like we saw LXRX and SLDB. I posted that one. You don't need to get the top. When there's this much volume, there's a lot of downside potential as well. TRIL, this one has my interest. This is one of those bigger picture type ideas where, it doesn't mean I'm trading it tomorrow. I've had it on scan for a little while now. But these types of days are the opportunity, and I'm not looking to buy a breakout on this thing, because you're going to buy the breakout and you're going to get, emotionally attached. It's going to flush out, and that should have been your buy day, just like this day right here. You bought the breakout into this daily VWAP, you flush out, you panic, you sell, and you miss out on all of this. So strategic entries, and I need to still do my own personal research as far as what catalyst it has and things like that. But it's got my interest. Usually in the mornings, Monday morning, I will go through, I'll type it in, read the news, figure out what's going on, and go from there. Because my scans are technical based right now. And then as an idea kind of starts to come of interest, I start to dive in a little bit more. But you can see we're coming into some serious resistance over here. And then we've got a gap fill all the way back up to 116, 120s. Hook has been a big picture idea. Nice breakout the last couple days. Had a huge rip intraday right over here, and it's been steady since. So I'm going to be watching dips for that opportunity, just like the same comments as LAIX. I don't want to be buying a breakout, but when nobody's looking, I'm interested on dips if it holds the overall trend. So that doesn't mean if it starts to fail and fail and fail. And just like LMPX, right? LMPX had a fantastic breakout, $8 to $44, but it started to pull back, and it should have held, and it should have held, and it should have held. So no matter what your bias is, price action trumps all, right? So never turn something that you've got a very strong bias on into a loser or an overstay or anything like that when price action says, hey, it should have broke out here. It didn't. Hey, it did it again. Failed. Next. So move on. And the point here is that hook, if it stops breaking out, if it stops holding trend, there's no reason to overhold things. PNTG, the main reason I'm interested is the volume starting to come. So this to me triggers, triggers a thought that, hey, maybe there's a opportunity here soon. This is the first day of good volume. This is actually the highest volume day that it's ever had since IPO. So it might be that transitional day where there's a lot of sellers despite closing well. It might have been a short cover met with a decent amount of sellers, and if that's the case, then maybe another day or two of breakouts, and then we get that nice short trade. So I'll be watching that one. Wrapped, very low volume. Don't be fooled by this 300,000. Typically it trades 70, 77, 30. It's very, very low volume trader. The only reason it had this was the market on close order right over here, which was 300, where was it? 182,000. So whether I think that was probably Russell or whatever, but there was a lot of rebalancing on on Friday. So don't be fooled and think that this is going to trade 300,000 shares. I mean, it may if it starts to get nutty, but this is the type that could go crazy. And there was CRNX. What was the? No, not that one. Let me find it. Let's see. CRTX. This is the type of trade that potentially could, go nuts because it's thin. It's done a lot of circuit halts before. We'd been watching this one for quite some time. IPO was a crazy move over here. I remember that IPO came back, but all these moves over here, I personally thought, hey, they're just taking advantage of the bio move and it's probably done, and it failed. Huge pullback, and then all of a sudden here we are, we're going nuts, and it was actually like 70 something after hours, 75, which is crazy. So it was actually up 27 at one point, 28 on Friday after hours for the day. So with that said, the point of mentioning that is, Wrapped is that kind of style where, if enough shorts are there and trend wants to break out, it very well could. TA, I want to remember this. This was a reverse split, and it reminds me a lot of RAD. And again, it's not necessarily a trade tomorrow, but I wouldn't underestimate this thing. And I could see this continuing to go and go and go and go. But I think two things. If you guys remember RAD when we first started to trade it, it's very thin on the way up, and then it would sell hard. Like it was a very thick name on the downside days, which was great. It was a great opportunity. So I think we could have something like that on TA. But the main thing is that I want to kind of keep this in the back of my mind over the next quarter, where if it starts to kind of fade off and then their next quarter is good, we might have a RAD type situation. So it's just a good reminder that, hey, remember how this thing trades, so that the day that it has that outlier volume, RAD, the reason I was prepared in the way that I was when I got long under 10 was I've stayed familiar with it. I've stayed, I know where the key levels were. The earnings, were good enough to really bring some serious volume to the tape. And with all of that said, I've traded it in the past, so I want to be familiar. I want to know how this thing reacts and kind of see how it trades over the next short while. Because I think that in a month, 2 months, 3 months, we'll have a big trade here. HOTH, just another bigger picture type idea. It's had runs in the past, but it's got some of the highest volume, minus the right after IPO day and right after this one. So we'll see what happens. It just has my interest. It's starting to do a nice little curl. This type of setup has been working very, very well. It's not a momentum trade unless we get a couple million shares. So I'd be looking for weak opens, potential breakout. If it starts to get over, this 586s, then we might start to catch some momentum. SDC, so far so good. This idea on Thursday night scan was to basically fade the gap. I didn't really trust the breakout. I thought it was just probably some short cover. This type is the type, in my opinion, that we're going to start to see unravel and potentially go to fives. It's just every single rally has been sold. They let it breathe for one day and then, they're back on the sell. So, sometimes I ignore these things, but the volume is great. So, the higher the better. And I think that eventually we're going to have a couple unwind days in a row and you're going to be like, whoa, it's $6. And that's the kind of trade that I'd like to take. SPCE, we need to stay familiar with this. This is going to be a massive trade opportunity. I think a lot of shorts are caught. I've tried it a couple times, just to kind of get a feel for it. But I immediately cover. I've considered buying the breakout, or dips along the breakout. This is kind of a perfect wick that we talk about. But I just haven't got there. So definitely potential breakout type move, but not necessarily a trade that I would take. I just want to stay familiar because I know that if this goes 11, 12, or squeezes out, we're going to have a big trade. We're going to have a $2, $3 type trade potential. So we'll see what happens. AKRX, this one was a great one from AKRX. There we go. This one probably boring for a lot of people. This was a great idea by T530. There was a Seeking Alpha article out basically saying it's going bankrupt. But higher the better, and I think we can unravel a lot further than you think. MIRM, little technical analysis thought here. I think it's pretty clear what the number is. Draw a line across. So, just to draw a line on this chart, just in case my mouse doesn't work. I'm trying to figure out why my mouse doesn't always show up. But just draw a line right there. So you can see that 22 is the key level. And so that's what's been a little bit difficult for, me, where I might get a good entry and it flushes out, and then, oh yeah, it was 22. That's why it didn't crack. And then over here, get a good entry. Oh yeah, it's 22. That's why it didn't crack. But when it's there and when it's heavy, if it cracks 22, it's going to go to 20 or 18 real fast. So there's that part that keeps you in there, despite being up a lot, being up, $1.50, $2 a share, whatever. But that's just why I've minimized the trade. It's just because I'm trying to get a good entry for when and if it does crack. But overall, it's been a good trade the last couple days. Last two, AKCA, higher the better. This is just one that I think we might start to see some unwind here. That's pretty much it. I want to see price confirmation, potential unwind, and then same thing with AMRN. AMRN is a very popular, very retail-oriented, long, heavy name, which is great. Everybody's made a lot of money. They've nailed it. It's been a big sell-off since the last news. It's done the same thing, but they save it because they had that forward-looking FDA decision. But now they don't. So I'm thinking that a lot of people are kind of thinking we're in this phase right here, in the potential of a next leg up in 2-3 weeks. But I think a lot of people are going to be dip buying, and then it's going to fail, and then we're going to have that unwind. And not necessarily that it's done forever. I'm just thinking that everybody's been so taught basically to buy all dips that at some point it's going to kind of catch up, and they're going to be maybe a little out of risk, over their risk limit, and they weren't really expecting it to pull back, and then it does, and then they end up acting out of emotion and market sells and things like that. And that's all I'm looking for. I'm looking for potential gap fill, and then it can go all the way back up. And that if you guys remember, that even happened to AXSM over here, where people just get a little ahead of themselves. They might have too much. They might be over leveraged. Then it pulls back, and then it pulls back, and it's like, oh my gosh, my gains. And then they panic on this day, and then you know what? That's it. That's as far as it ever went down. And now look at it. So again, it's not an AMRN bash. I know there's a lot of like perma AMRN type people out there, but it's just more of a potential where everybody is just so trained to buy dips because they've been rewarded. I just think we're going to have that one outlier unwind day where one person bails and the next person, and then it flushes out. And that I want to just be there for that day. I'm not looking to short it every single day. I just want to be there that outlier day that we can get $1 or $2. So that is it for Scan for this week. If you guys have any questions, the drill, reach out. Like I said, we're going to start to do a couple more videos. I'm going to try to get a list together of different ideas and thoughts, and when those trades happen during the week. Hopefully I'll have it on record, or I'll at least be able to discuss the concept, and then bump out some videos here for you guys. So again, as always, thank you guys for the comment. Thank you guys for listening, and we'll see you in the room tomorrow.